Institutional investors in SoFi stock have been loading the boat. Every single month, the amount of shares institutions own have increased. Take a look at this chart. Back August of 2021, not all too long ago, institutional owners only owned about 25 million shares of SoFi. Now that number is sitting at 450 million shares. Why has SoFi stock continued to drop? The sellers are gone. The shorts have taken over. Long story short, but there's more we have to dive into. This is kind of going to give you a reference on what I expect throughout this year when SoFi stock could bounce back as well. So we are going to get into all of this information. Stay tuned. It is time for a SoFi stock update. Hit the like button, subscribe to the channel. Let's get this channel to 1,000 subscribers. Thank you guys for tuning in, and I hope you guys find value out of this video. Let's dive into it. All right, guys. So like I just illustrated with this chart, the institutional ownership has done nothing but go parabolic as the price of the stock continues to drop. More institutional investors continue to buy the dip. So we're going to talk about exactly why the stock has been falling, but I want to go over some of these numbers with you guys. So institutional shares that are long sits at 447,497,000 shares, 49.15% of the company. Now, change of 78.95 million shares, 21.42% MRQ. MRQ stands for most recent quarter. So ever since the charter came out, the bank charter, institutional investors have really started to load up on SoFi stock, a change of 21.42%, 79 million shares. That's a pretty big deal. But what has happened ever since the bank charter came out? Well, let's look at the stock. Let's go ahead and pull up SoFi. This is when the bank charter came out, in here, right? Or was it over here, right? So these little rallies in here. And, you know, stock went up and it came straight back down. Now we're hitting new all-time lows. We've never been lower than where we are currently at right now. $7.22 per share. We did actually close the trading day at $7.23 per share, so 1 cent off the all-time low, but you're pretty much at the all-time low. So what has been happening? Well, if we take a look at the Ortex data, we can see insiders have been buying. We can see the largest holders of SoFi, institutions, keep on buying. But what is really happening and why is the stock going down? So it comes down to the short interest, which is sitting at about 20%. The current shares that are sold short of 143.07 million. Now, how does this actually work? If institutions keep buying, shorts keep shorting, but obviously institutional owners own a lot more shares than 143 million that are sold short. It all comes down to velocity. So when you're talking about a stock, yes, it goes off of supply and demand, especially on a daily basis. If there is more demand for a stock than supply, the stock will go up. Now, if the short sellers are flooding the stock every single day with supply, and there's not enough demand to offset that because there's not a catalyst, there's really no good reason besides the stock is a good long-term buy and hold to buy the stock. Now, Wall Street looks out in really 3 to 6 month time frames. They don't care about what SoFi will be in 3 to 5 years, that the business will likely 10x in market cap by then. In my personal opinion, by my own calculations, they don't care about none of that. They care about the next 3 to 6 months. They say investing, but really Wall Street is just a bunch of traders. So what the shorts do, they come in and beat the stock down, usually at the open of every single day. So regardless of what the business looks like, what the growth rates are, the stock continues to be shorted into the ground. But what you see on the option activity, quite the opposite. Quite the opposite. Usually you see a positive order value on any given day, but a lot of these options, especially the calls, are coming in for January 2023, but most of them for January 2024. So hedge funds, institutions look to be pretty bearish here in the short term, but they do look very, very bullish in the long term. Like, look at this one. This was placed on April 12th, both of these. January 2023 option, January 2024 option, a $250 call, a $5 call. The $250 call for almost $300,000. That is a leap. That is a long-term contract. And then the 2023 was a $5 call for $75,000. Or look at this one, January 2024, $10 call for $118,000. Look at these two. January 2023 call for $660,000. It's very, very obvious here. Institutional investors are very bullish long term, but they are quite bearish here in the short term. Now, why exactly is that? Well, what is going on in the economy right now is that interest rates are going up. So in theory, that should mean SoFi would have less demand for their products. Now, we know SoFi is branched out into many different businesses, but it gets stereotyped as this only lending service, right? It gets stereotyped as all they are is student loan refinancing, car loans, and home loans, when in all reality, the trading revenue alone is expected to surpass all of that here in the next coming years. And as far as the news that we just got a couple days ago, the trading activity was actually up 13% in the last month for SoFi Invest. And you also have Galileo card services. That's not going away, right? And now they have branched out with Technisys. I think that's how you say that, for really to capture some of the South American banking activity down there. So they've really started to diversify themselves. And SoFi has also cut guidance, which is bad in the short term, but it will be good once they do report earnings. And they actually report earnings coming, where is it? SoFi on April. Actually March 10th, they do report earnings. So I think it's going to be really good coming on earnings. But that's what is going on. The markets do not like stocks that are lenders when interest rates go up because it kills demand, or in theory it should. The question is, how much will it kill demand? It'll have some level of impact, but have the markets already discounted that in SoFi share price? And I think it's very obvious. When the stock goes from 25 at the peak to 7, you've discounted and really priced in a lot of that bad news. On the other hand, inflation is 8.5% year over year. So technically, companies' earnings, if you're looking out to 2025, you're going to have to probably discount 20% of earnings if inflation remains this high. Now, I do not personally think inflation will remain this high because, after all, the world is pretty much based off of capitalism. There's always going to be somebody that will undercut the other guy, especially when demand does slow down, and that is currently happening right now. It's basically Econ 101 that a lot of hedge funds, a lot of money managers don't fully realize. When there is an expansion of the economy based off of funny money, giving out free money, right? Trillions of dollars, printing like 40% of all money in circulation in a 2-year time frame. Of course, you're going to see a boom to the economy. Of course, you're going to see inflation. But of course, at the same time, you're going to see a contraction. Now, that's the key. That will bring inflation down. I don't know when. I don't know what month it'll be. We could have already peaked in inflation. It could continue to go throughout the rest of this year. But I do know here in the next couple of years before 2025, inflation will obviously come down, and you won't need to discount as much of these company earnings looking out into the future, right? So I know that's on the near-term horizon, and that is definitely not helping SoFi stock as of right now. At the same time, the Federal Reserve is talking a big game and saying that they are going to hike rates at the fastest pace that they have done in a very long time to fight inflation. Now, once inflation starts to tick down, investors are going to price in the fact that the Fed will not have to do as much tightening, because after all, the Fed wants to keep rates as low as possible to make sure the economy continues to grow, but they have to get inflation down. And it's like, what's worse? Super high inflation or pushing the economy into a deep recession? They're both really, really bad. If inflation comes down, you don't have to push your economy into a deep recession. And I ultimately think that will happen sometime here in the second half of the year. June, July, August, September, October, November, December, sometime in that time frame, you're going to see slowing growth and you're going to see inflation coming down. The Fed will not have to act as aggressively. That's going to be seen as a positive for the markets. But as soon as inflation ticks down, that's when you're going to see these stocks really start to bounce back, because the markets will price in the Fed doing less rate hikes, and that will help bolster demand or not reduce demand as much, and SoFi stock would be primed to benefit from that. Now, on the other hand, you always have that possibility of a buyout. Now, I think a buyout would probably come here in the next couple of months if that is the case, and I think the price would be $15 to $20 for that buyout, at least $15. I don't think shareholders would go for anything less than that, right? But nonetheless, that's kind of my time frame to when I think SoFi stock will bounce back, be able to hold these gains and actually start to rally again. When inflation ticks down, could be next month, the next inflation report. That's very, very possible. Or it could be a couple months from now. Or obviously when a buyout does happen. So those are really my thoughts, and that is why SoFi stock continues to drop. As far as some of the other data that you guys probably want to know, short interest 19.86%. Current shares that are sold short of 143.07 million. Cost to borrow numbers are not here, but the utilization remains at 100%. That means that institutional investors that keep buying SoFi stock, like you see from this chart, quite a bit of them at a quite aggressive pace, are not willing to lend out their stock for 3 to 5% interest rates. That's the cost to borrow rate. So that's obviously a very, very bullish sign. Days to cover is sitting at 3.14. Now, I don't expect a short squeeze anytime soon, but I think once things reverse and inflation does tick down towards the second half of this year, that's when you could see a lot of short squeezes across the market, and it could be something that really takes your breath away. You could see a lot of these stocks rebound in a very, very short amount of time, and that's kind of what I expect when that moment does actually happen. So am I buying SoFi stock at these prices? Yes. Am I buying leaps, long-term options of SoFi at these prices? Yes, and I continue to buy more almost on a daily basis because I think SoFi stock is really a long-term win. And if you can hear through the noise for the next 3 to 6 months, I think you will be rewarded very favorably for that. Now, I'm not a financial advisor. I am not a financial planner. So come to your own conclusions. What your thoughts are on this. I'm not the guy you should listen to make all of your investment decisions. I am simply an opinion, and I think this is a pretty straightforward one. I don't think there's really too much or too many arguments that could say otherwise here, unless you think inflation's going to go to 50, 100%, where hyperinflation, the dollar is going to fail, all of that. That's a different story. Let me know your thoughts on this video down below in the comment section. Hit the like button, subscribe to the channel, source your comments, questions, or concerns as well down below in the comment section. Thank you guys for watching, and I'll see you in the next one.